What's going on, cash flow hackers? What if I told you that your whole life insurance policy could be your bank, your safety net, and your opportunity fund all at the same time? Well, that's what we're going to cover in today's video, where I'm going to share with you the 12 different ways that I suggest using your cash value in your life insurance policy to help accelerate the growth in your life. Ultimately, I always say, one of the things and reasons that people struggle with their money is because their money is not in alignment with their values and beliefs. One of the biggest problems that I see in personal finance is that people are chasing returns too much. They think that the solution to their problems is going out and chasing and getting a bigger rate of return on investments. And unfortunately, nothing could be further from the truth. So as I go through today, the 12 different ways that I suggest using your cash value, and by the way, these are not all the different ways that you can use it. They're just the ways that I suggest are kind of the best and the different ways that I see most commonly used, most effectively. And so as I go through this, I think what you'll see is chasing rate of return is not the solution at all. It's about financial structure, and it's about building financial efficiency through how we utilize our money in our life to help ultimately align our money with our values and beliefs and our goals and objectives so we can actually create a life that matters to us. So without further ado, let's go. All right, so let's get into this. The first way that I suggest that people utilize their cash value in their life insurance is for the most common or obvious way to me. It's when I created the idea of cash flow hacking, I think about 4 years ago now, and took the different strategies that we utilize personally to invest in real estate, and that is by leveraging and saving money inside of our whole life insurance policy, borrowing against that money and leveraging that for down payments of cash flow producing properties. And so what that looks like is going to use the whole life insurance for real estate investing. There are different ways that you could do this, obviously. Different people have different strategies. My favorite is finding cash flow producing assets, utilizing the down payment. So typically what we have here, and I'm just going to kind of go up here a little bit and work on this. And so let's say you could find a $400,000 house. The idea would be to save $100,000 inside of your whole life insurance policy. And so that's a 25% down payment. And so then you finance the $300,000 through a traditional bank. And so what does that look like? Now you basically have two mortgages. You have one through your policy and one through the bank. And the great part is, this is a great way to kind of filter out, is this a good investment or not? Because if you can create enough cash flow in a property to cover both the payment terms to pay back your policy loan, along with the payment terms that are going to cover your mortgage, taxes, and insurance, now you know what you're trying to create from a cash flow perspective, because I believe we only want to be investing in cash flow producing real estate. It needs to be providing positive cash flow out of the gate to mitigate risk and things of that nature. So one of the things that we're looking for, cash flow above all costs. And what happens is you take this and you set payment terms. And as you pay it back, you recapitalize your liquid accessible capital. And this is the idea of cash flow hacking. And so what we do, and I've got more videos on this, I'm not going to go deep down into this, but this is my favorite way to utilize cash value inside of your whole life insurance. It is the way that I know that people can go from zero right now to saving, and then using the savings to invest. And ultimately you compound the cash flow through this whole process, and you can reach financial freedom in 10 to 15 years at the longest, right? And so this is why I call it a retirement rescue plan, because there's so many people behind the 8 ball on their goals that they're reaching for retirement, and this is one of the solutions for it. Now, the second way is business capital, right? So utilizing it to finance startup costs for businesses. Maybe you already have a business, you already have cash flow, and you're trying to think about, how do I save up? How do I have a reserve account for marketing expenses to expand the business, to reinvest in inventory, to make sure that I'm good? What happens if I need to buy major capital equipment or vehicles? I have a client that has a printing shop, and they used it to buy some massive equipment that normally the financing cost was going to be double-digit percentage rates to finance. They were able to finance utilizing a policy loan and never interrupt the growth of that. And they got to set the terms for the repayment schedules on that. Vehicles, a big thing. We have a lot of people that run electrician companies, plumbing companies, HVAC companies, things like that they have fleets of vehicles and they utilize these policy loans for stuff of that nature. Dental equipment, people that run dental offices, chiropractic offices, a lot of these types of industries that need this type of equipment. Well, rather than paying high interest rates, one of the biggest things, you're going to hear me say this several times, but you need to control the cost of capital. And the reason that we want to control the cost of capital is because whatever you're paying to the bank is money that you're losing unknowingly and or unnecessarily. And if we could recapture that money, well, that's more money in our lives, in our business, and ultimately as a business owner, that money that is saved in your business ends up flowing to you. And while, people are thinking about the fact that they want to get the biggest rate of return, I will make the strong argument that controlling the cost of capital and having a financial structure that allows you to do so increases your financial efficiency on a greater sum of money and flow going through your life. That makes it so you don't have to worry about getting such big returns. You can actually create the same results with less risk. That's the power, right? The cool part about this too is you get to skip the bank approval, right? Anybody that's owned a small business or whatever and dealt with bank loans, you understand the nightmare and the headache that exists with that. The third way is using it as an emergency fund. I've had a lot of videos on this. I'm not going to spend a lot of time on this because I've done a lot of videos on this topic because I think it's so powerful. Utilizing an emergency fund, when most people think of an emergency fund, what do? We think about 6 months to 12 months in an emergency fund in case we lose our job, right? And that's the challenge. But to me, I always kind of tell people, if you losing your job is what you would constitute the greatest emergency, I think you need to kind of elevate the vision for your life. And that's not an emergency. I look at it as jobs are very replaceable. We're going to get into that as we go through here when we get to number 10. But the bottom line is having access to cash is important. Emergencies do happen. I don't know if this is an emergency. Everybody constitutes emergencies differently. Maybe you constitute an emergency as saying your air conditioning unit died at your house. Or maybe it's something of the accord where you need a new car because your car broke down and it doesn't make sense. Maybe you lost your job. Maybe you need to tap into your living benefits because you were diagnosed with something like a true emergency like cancer. I've had clients that have been diagnosed with pancreatic cancer, metastatic breast cancer that has spread to the spine and different parts of their body, things of this nature where you want to have living benefits because you want to have control of your medical directive. This is a big deal. A lot of times when people get sick, losing your dignity through the healing process because you're forced into a medical plan that doesn't align with your values, that can be a really big challenging thing. And so to me, those are the real emergencies. And obviously the older we get, the more susceptible and at risk people are to that. And it's when I first started in this business 15 years ago, the living benefits were something that weren't high on my list of things that were important. But the older I get personally, and the more experience I've seen with clients and with family who have actually had to leverage and utilize these living benefits to help stay alive. And I share the story about my father-in-law who had stage 4 pancreatic cancer. It was given 90 days to live by the oncologist who said it was so bad because he had a 7.5 centimeter tumor that had spread from his pancreas to his liver. And they basically said there's nothing we could do. Even chemo and radiation, the doses would be so high that would kill him. And so we went and did alternative treatments. It was expensive. It was $250,000 out of pocket. But guess what? He's still alive 4 years later, and his oncologists are still confused about how that is the case. And so that control is empowering, and that empowerment gives hope. And I believe that hope can actually lead to better results because our bodies and our minds have the ability to heal ourselves in ways that science doesn't even understand fully, right? And I'm not saying it's just that. You got to have the right treatments and the right programs, but there is something to be said to be prepared and empowered for the whole process as well. So now number 4, debt payoff and refinance. This is a big thing. So this is a controversial topic in the let's call it infinite banking space, the cash value life insurance space. A lot of people have these debt programs that I don't necessarily agree a whole lot with. There are different strategies, different ways. But when you have the ability to refinance your debt into your whole life policy, you can eliminate your high interest debt and you can refinance it at lower rates and recapitalize and recapture that money that you'd be giving the bank, and you never interrupt that money. So now your money is going to be constantly growing in the background. So what you do is you turn your toxic debt into controlled productive leverage. As you pay it down, you become more liquid, and it's a beautiful thing. So debt payoff and refinance is number 4. Number 5, personal revolving line of credit. So this is let's just kind of compare it to a home equity line of credit. People utilize these in all sorts of different ways. The idea is to borrow against it, repay it, and reuse it. So you're keeping that money going, you're keeping it growing, you're keeping it moving. And so you want the velocity of money. That's probably a phrase that maybe you've heard, is you want the velocity of money. You want to borrow against it. The more you borrow against it, the more velocity is, the more you repay, and then the faster you repay it, allows you to reuse it. And creating this cycle here allows you to kind of create more wealth with less risk. And the cool part is, once again, you're never interrupting the compounding. You're going to hear me say this over and over and over again, because that is the key to the success. And at the end of the day, you control the terms of the agreement when you're talking about your line of credit. If you do a line of credit with your bank, you're going to have minimum monthly payments. When you do it with a cash value loan, you are able to set the terms. And so maybe that's 1 payment per year. Maybe it's 5 payments per year, 6 payments per year, every other month, once a quarter. It doesn't really matter. You control the terms. You get to decide, and it has no credit hit. So no negative credit impact, which is a huge deal for most people to consider. So that is number 5. Number 6, medical expenses and health optimization. So I know I talked about for the living benefits for the emergency fund. That was more of an emergency style kind of cancer, critical illness, something of that nature. When we talk about medical expenses and health optimization, I'm talking about elective treatments. I'm talking about different wellness programs. We're talking about biohacking. We're talking about just elevating your health through alternative therapies. Maybe this is stem cell treatments. Maybe it's I don't know. It could be anything you want. Like my wife and I, we're buying an ozone treatment therapy system right now. And we're going to be able to finance it through our policies, right? Like that kind of stuff is really, really important. All the things that traditional health insurance will not cover is what I would consider in here. You can kind of take that and go with it as far as you want. But that is number 6. Number 7, education funding. This could be for you. It could be for your kids. It could be for your grandkids. It doesn't really matter. But this is a great alternative to a 529 account, because when we look at 529 accounts, a lot of times people don't realize that the more money you have in a 529 account, the more it kind of works against you on your FAFSA. One of the big things that I kind of coach people to is the idea of not just saving for college, but trying to save on college. And the idea is, if I have, let's say just hypothetically speaking, if I have a 529 account with $200,000 and I have a kid that's going to school, this $200,000 is fully viewed for the kid at, let's just say, $50,000 per year, right? But if I have a whole life policy with $200,000, that full is hidden from the university. So what happens is, it's not just how much am I saving and what rate of return am I getting on this $200,000. The idea behind this is what am I going to be doing for saving money on college? And if I'm going down to a college that's $60,000 per year, and at a 529 account, they're going to expect me to pay the full amount. But then the whole life policy, because of the fact that they don't see it, and I've able to structure my income, especially for entrepreneurs with a 2-year look back, when you really get ready to plan for college, you have the ability to do this. What happens if they reduce, and you get grants and they reduce your annual sticker price, you don't pay sticker price, but your cost of college gets reduced to $40,000? That's the power. It's not just about the rate of return in your 529 accounts. That's what people need to understand. And so that is the power behind utilizing education funding for your education, for your kids' education. Now, this can be, and I say your education because maybe you're using it for continuing education. Maybe it's a trade school as an adult. You're going back to nursing school or something of that nature. Or maybe you're doing a late start on college, or maybe you're just doing it for your kids. I don't know. It doesn't matter. But just know that that's there. Number 8, Family Opportunity Fund. This is kind of like the Rockefeller method. If you haven't gotten the new Rockefeller book, What Would the Rockefellers Do? I've written the foreword. Garrett Gunderson wrote this great book. I wrote the foreword to it. I'm going to put a link down in the description below in this video. You can go get that book for free. I've got just amazing access. We actually have a free Living Legacy course in that at the same time that I'm going to give you access to. So go check this out. This Family Opportunity Fund is a huge deal. One of the things the Rockefellers did, every kid in their family that's born at day 14, at the age of 14 days, they are getting a whole life policy. And the reason is because we want to help our children or grandchildren start businesses, buy houses. They want to, maybe we're funding their policies. At the end of the day, and once again, I'm not going to go deep into this because this is a huge conversation. I want you to go watch other videos. I want you to get that book. I want you to read it, whatever, because that is ultimately what's going to help you get to where you want to be. But this is a blend of wealth creation and legacy building. If we can help our kids build wealth, if we can build our family wealth, and then utilize the life insurance on the back end to kind of be the backstop and the protector of that wealth, that helps us build our legacy. And so we always say heritage over inheritance. We don't want to just give our kids money. We want to give our kids systems, teach them how to build a system. We want to invest in different businesses and learn how to create wealth and have that mentorship. Number 9, large purchases and renovations. If you ever have lived in a house long enough, you know that doing renovations eventually is going to be kind of part of the conversation. Large purchases, whether it's automobiles, boats, toys, whatever. One of the things I want to caution against with this, a lot of people say, oh, learn how to make money on all the cars you buy or all the boats you buy. I don't subscribe to that notion, but I will say if you are going to buy a $50,000 car, a $100,000 boat, whatever that purchase is, if you would buy it anyway, I'm a big believer that you should buy it in the most efficient way possible. And I will say that buying it with a policy loan is the most efficient way possible. And I will say that the cool part about this is that it's a system or a filter to make decisions through. Right? So the reason I say this is because a lot of times people go out and they say, I'm going to buy a boat, I'm going to buy a car, I'm going to do this, I'm going to do that. And there's a whole idea of like saving and paying cash versus just financing all of our things. And when we finance all of our major capital purchases like cars and toys, like boats and RVs and things of that nature, well, then we're not delaying gratification. It allows us to get into debt and it creates a problem for us. And by having this system in place, by saving inside of our policy, it allows us to implement saver-like behaviors, which is great, and it helps us keep out of debt and build these good habits and financial structures. But then the good part is instead of paying cash and interrupting the growth of our money, now we're borrowing and leveraging the cash value in our loans to make these major capital purchases. And that allows us to have more control of capital. It helps us grow to become who we need to become, to actually make these good decisions. And we have a filter that when we decide that we want to make these decisions, we see if it really fits into what our goals and objectives are, and see if it's in alignment with our values and beliefs. That's a big thing. Number 10, this is my favorite one. Invest in yourself. This is kind of one of those areas. I've spent hundreds of thousands of dollars on myself over the years, investing in myself through events, courses, mentorship, personal development, whatever it is. This is a huge deal. I think this is, to me, if I were to pick one area to start, this is it. I believe that you are your best investment. You are your number one investment. If you grow your mind, you grow your income potential. That is it. It's that simple. And so I believe that for most people, saving and investing, or saving, but saving with the intention of investing. But the first investment that you make should not be Bitcoin. It should not be stocks. It should not be even your business. It should be in yourself. It should be in growing yourself to make sure that you are a person who's worthy of starting a business, who is capable. I mean, everybody's worthy to start a business, but you got to make sure you're capable to go out and do it. And a lot of times it takes getting around the right people, going to live events. And when I say events, I mean live events. This also would be like masterminds. These are my favorite, to go to masterminds, to get to learn from people who are just ahead of where you are. That is a big deal. And surround yourself with people that have success in your line of work. Join different masterminds, whether it's like if you're a life insurance agent watching this, get to a mastermind. We are running, just side note, we are running a mastermind down at our Zaria Eco Hotel and Retreat Center just for life insurance agents from April 28th through May 3rd. We got a couple spots open. If you're interested, reach out. You can go to mastermind.life180.com and check it out. But that's the bottom line. You are your best investment. If you want to elevate your income, if you want to elevate your ability to serve people, you have to surround yourself with people who are ahead of where you are and can bring you along with them. Number 11, private lending. This is a big one for people, whether it's real estate notes, peer lending, whatever. The bottom line is you have the ability to arbitrage your policy loan rate. That's what the whole deal is. If the idea behind this is if I have a policy loan at 6% and I can go do a hard money loan at 15%, and all the while my policy is going to grow, policy growth at 5%. Well, now I have the policy loan at 1%, and the bottom line is I'm able to clear 14% on this deal, right? But the cool part is I'm clearing 14%, but the money that I loaned is never going to be interrupted. So it's going to grow and grow and grow. And so that's why I always tell people, once again, this is a different video, but if you want to learn more about this, make sure you subscribe and hit the bell. That way you are notified every time I launch a new video, because what happens here is as the policy grows at 5%, we have compounding interest versus paying simple interest. So people go, well, why would I pay 6% only to grow at 5%? And I'm going to tell you that if you do it the way we show you, it actually works out. That's why I say money math and regular math are not the same thing. So you need to understand money math to be able to make this work. And we have other videos that will show you how to do that. Now, the other thing is bridge financing. This is one of the statistics that I always remember, that is one of the most powerful statistics I remember from the Great Recession back in 2008, 9, 10, was the fact that 70+% of businesses that failed were actually cash flow positive. And that's because their financial structure was not done well. So they didn't have any availability for gap funding, bridging financial needs, or they didn't have any gap funding available for when times got tough, when cash flow dried up. So you want to have money in a fund to make sure that you cover these cash flow gaps. When you do this, it prepares you for these economic environments where other people struggle and you can gobble up assets at pennies on the dollar, which is a great thing. This is also great for other people that are doing different events or different types of investments, like flipping houses, entrepreneurs, like using it in the way that I just kind of explained. Maybe also your income is very seasonal. Maybe you are very event driven in your business. And so you go event to event to event. And so you have long gaps for incomes, but when you get paid, you get like hit with a big windfall of capital, which is a great thing. But you need to be able to sometimes fund the gap when the gap is maybe a little bigger or a little longer than you're used to. Fund these income gaps. That's what it's all about. So those are the 12 ways that I believe are the best use for the cash value in your life insurance policy. What I would be curious to hear about is, what are the ways that you like to use? I would love to start a dialogue in the comment section below, learning about how you utilize the cash value in your policy, seeing if you have any questions about any of this stuff, and we can go back and forth. I would love to take some of that content, some of that information, and make more videos, dive deeper. Are there areas that you, in ways that you utilize the cash value in your policy that I didn't mention? Let's dive into this, because I think At the end of the day, this is one of the most powerful assets in the world when you understand how to utilize it. Once again, it's not about chasing big rates of return to reach our financial goals. It's about financial structure. And when I say financial structure, a lot of that has to do with how are we saving our money? Where's our money being saved? How are we able to utilize that capital to help us align our money with our values and beliefs, reach our goals and objectives, and ultimately use our money as a tool to create a life that matters. So that's it for now. If you have any questions, comment in the comment section below. If you haven't already, make sure you subscribe and hit the bell. That way you're notified every time I launch a new video. Till next time, have a blessed, inspirational day. Talk soon. Later.